News 9 Plus. Download now.
Hello and welcome, I am Suyash Maheshwari and you are watching First Stick here on News 9, where we break down the morning action on D Street and the top stocks that will be in the spotlight today. As always, let's begin how the equity markets around the world are doing. Now, US stocks rallied on Tuesday, building onto their strong November gains as Wall Street cheered new US inflation data that raised hopes of the US Federal Reserve wrapping up its rate hiking campaign. The Dow Jones Industrial Average surged almost 500 points to end 1.43% higher on Tuesday. The S&P 500 on the other hand rallied 1.91%, notching its best day since April 2023. Now, the Nasdaq Composite was the best performing index between the three as it rallied 2.37% in Tuesday's trade. With this, S&P 500 and Dow Jones are up 7.2% and 5.4% respectively in November, while the Nasdaq is up 9.7% on pace for its biggest monthly gain since January. The strong rally in the US stocks and the cooler than expected inflation data has also prompted a rally in European stocks as Stoxx 600, that represents the performance of European equity markets, closed with gains of 1.34% on Tuesday. As for the Asian markets, it's a sea of green across the board, with indices opening with the gains of 1.5 to 2% this Wednesday morning. Hang Seng, as we speak, is up 2.7%, Japan is up around 2%, and South Korea is also up with gains of about 2%. And it's not just equities that are doing well, other asset classes are also favoring the bulls. The 10-year bond yield in the US has eased by 23 basis points overnight and is currently at around 4.43% mark, down about 60 basis points from its 16-year high of 5% plus levels. The dollar index, on the other hand, has eased by 1.5% overnight and it's currently hovering around the 104 sort of levels. Oil, on the other hand, was largely unchanged, with Brent crude currently sitting at around 82 barrel a mark. Now, coming back home, Indian markets opened with a gap up, with first tick for Nifty coming in at 19,651 mark. Now, as you can see on your screen, the numbers are as of 9:30 a.m. and the market seems to be holding on to those gains. Nifty, as we speak, is up 0.95% at 19,628 marks, so holding on to the 19,600 sort of levels. Sensex, on the other hand, is up 0.91%, well above the 65,500 mark. The mid-cap and the small-cap indices are also trading with strong gains. Nifty Midcap 100 is up about 0.61%. Now, these numbers are as of 9:30 a.m. this morning. The market is pretty much holding on to those gains. The Nifty Small Cap 100 has hit a new lifetime high. It's currently up about 1% at 13,738 sort of levels. Volatility index, India VIX, is up 0.13%. Now, this is as of 9:30 a.m. sitting in at 11.2 sort of levels. But with that, let's also welcome Mr. Rajesh Palvia, Senior Vice President of Technicals and Derivatives Research at Axis Securities. Sir, a very good morning. Appreciate you joining us here on First Stick.
Good morning, Suyash.
Now, sir, all through last week, we were hearing from experts that we were talking here on First Stick that 19,250 to 19,500 will be a congestion zone for Nifty, at least going forward. And till we break out of those levels, we can expect some sort of consolidation. Today, we have finally broken above that. We saw a gap up opening. Is this the breakout that the market was hoping for?
So definitely, if we look at the derivative data front, the most of the call writers were aggressive at 19,500. So now we are trading very well above 19,500. Short covering action is clearly visible post this gap up opening for all the strikes of 19,500, 550 even 19,600 strikes. Call writers are also, started covering their position. So it's a day of short covering as everybody was expecting that, market may remain in the consolidation. And this positive global cues have given a surprise to the market, and all the macro micro indicators are now moving and indicating towards the bullish case at this moment. So this short covering may yes extend further, and possibly Nifty can scale up to the level of 19,700 750 zone also in the continuation of this pullback action. So as of now, the major put writers are shifting their base on the higher side, and the base is now moved little higher towards 19,400. Even 19,500 strike is also attracting some put writing activity. So I think 19,500 is likely to act as a good support area for minor dips, and Nifty may scale up to the level of 19,700, 19,750 in the continuation of this pullback.
All right, that's a view on Nifty. Sir, I also want to get your opinion on the Nifty banking pack. Now, I mean, throughout 2023, Nifty Bank has been a relative underperformer, but come November, we have seen it outperforming the benchmark. You know, Nifty is up about 2.8% or so in November. Nifty Bank, on the other hand, is up 3.5%. Today, it also has reclaimed that 44,000 sort of levels. What are the levels you are tracking on Bank Nifty, sir?
So again, in the bank Nifty, 44,000 is very important level, and as we already broken out above 44,000 level, so here also we are seeing that short covering action. PSU private, both the banks are showing good traction since last couple of trading session. Even especially in the PSU bank, we have seen good traction in previous session, and follow buying is there in today's session also. Large cap bank from like Indices Bank, HDFC Bank, ICICI Bank, these all banks have started participating in this pullback. So Bank Nifty is also looking promising. 44,000 is the now important level to watch for. If it's hold those level, then 44,200 to 44,500 is the next level. Already we are trading above 44,200. So next level for intraday perspective is 44,400 for the Bank Nifty spot. And if we hold this 44,000 level for next couple of trading session, then this rally can extend further higher towards 44,600 to 44,800 also. So here again, most of the large cap banking stocks are showing good traction. So maybe another round of short covering we can witness in the Bank Nifty also in couple of trading session.
All right, sir. Sir, I also want to get your view on the broader markets in general. Now, Nifty Midcap and Nifty Small Cap have shown good bit of resilience in the, in the recent market volatility that we have seen in the last 1 month or so. We have been talking about here on the show about how Nifty Small Cap Index has been the strongest part of the Indian markets, scaling new highs consistently. But the Mid Cap Index also, sir, it's also on a 9-day winning streak. It has reclaimed that 41,000 mark, around 400 points shy of that all-time high levels. What's your view on Nifty Mid Cap? Can we see another all-time high in the recent run-up?
Yeah, definitely, Shreyas. Looking at the overall structure for Nifty Mid Cap as well as for Nifty Small Cap, in last couple of weeks, we have seen, broader market have improved, and, market sentiment has also turned on the bullish side. So whenever we see these kind of, momentum, mid cap and small cap all generally, perform, and outperformance is always there. We are very much optimistic on the Nifty mid cap, and possibly yes, we are going to have a new all-time high very soon for Nifty mid cap, and this really can extend further higher as we can see on the daily as well as on the weekly chart. Now V-shaped recovery is taking place for Nifty mid cap index on the daily chart, and breakout is already there. So these breakout can give furthermore, momentum on the higher side. 41,700 to 42,000 could be the next target for Nifty Midcap Index on the higher side. So those who have already bought at lower level, they can hold the positions as the market breadth has already improved. That clearly shows that sentiment is coming back to the street on the buying side. And your stop loss should be at around 41,000 for Nifty Midcap. 42,000 is the next target where we are projecting in the next couple of weeks for the Nifty Midcap index.
All right, that's a view on the Midcap pack. Sir, shifting focus to stocks, one of the stocks that is on my radar this morning is the Coal India stock. I mean, the kind of run-up that we have seen in Coal India in the recent, last 2-3 months. Since September, the stock is up almost about 50% or so. On Monday, it ended about 5% higher, hitting that 8-year high of about 350 levels. Today, it has scaled a new all-time high. What's your view on Coal India in general, and how is it looking on the price chart? Can one enter the stock at this current juncture?
Yeah, definitely very strong momentum in Coal India for this calendar year, almost 56% kind of up move we have already registered for this stock. Most of the PSU stocks are already showing good traction in last couple of weeks. The kind of momentum which we are seeing on the Coal India, even on the derivative front, series on series, there is a long built up formation since last couple of series, which clearly shows that this stock may continue furthermore upside, as this stock has already given a breakout on the daily, weekly, as well as on the monthly time frame. All the indicators are on the positive side, so we expect Coal India can scale up further higher towards 365, 370 for trading perspective. One can keep those target with stop loss of 340, but on a positional basis, we expect this stock can continue furthermore upside in coming month towards 390, even 400 level. Also very strong chart pattern on the across all time frames. So we are bullish. Buy on dip should be your strategy for Coal India. For positional basis, your stop loss should be at around 335.
All right, that's the view on Coal India. Buy on dips, as Mr. Palvia suggests. Sir, another stock I want to pick your brains on is Dabur. Unlike Coal India, it's not doing so well in 2023, and there has been a lot of negative news flows in the last couple of months. In October, we heard that there was a cancelled lawsuit against some of its subsidiaries in US and Canada. Then today, the latest is the FIR filed by the Mumbai police against the group and the chairman Mohit Burman, as well as the director Gaurav Burman. Now the stock is down about 1%. Year to date, it's down about 6.5%. What's your view on Dabur? Is it a stock that one could add, given that it has corrected, about 6.5% or so in 2023 alone?
So since last couple of months, stock is in a broader consolidation range. 500 is the lower band for the consolidation zone, and on the higher side, 600 is the major supply zone. Stock is not going anywhere since last couple of months. So we believe that further more consolidation activity we can see in coming months also, until the stock not crosses above 560, 570 zone. It may remain in the broader consolidation zone. So whenever stock comes near to 500 is a for traders. Whenever it comes to near to 500 level is a buying opportunity with stop loss of 490. In the pullback towards for 540, 560 is a profit booking zone where you can book profits. On the breakout above 560, they can hold the position for upside target of 600. The major breakout or major supply zone for longer term time frame is on 600 level. Until this stock not crosses those level, that may remain as a major supply zone for any kind of upside momentum if we get in this stock. So sideways consolidation is likely to be there for next couple of months. So buy on dips, but with a strict stop loss of 490, buy around only 500 zone. That's the major support area in the decline.
All right, that's the view on Dabur. But sir, before we let you go, could you give us your 4 to 5 trading ideas in the market in the near term?
As we discussed that PSU banks are looking very promising. So Bank of Baroda is looking attractive now. Stock is managed to give a breakout about 20-day moving average after the corrective move. Now stock is recovering and given a breakout on the daily chart. Looking at the breakout, we expect that Bank of Baroda can continue further upside. As whole PSU banks are doing good. 208 to 210 is our target for trading perspective. One can buy, regulate this stock with stop loss of 192. Another stock is from housing finance sector, that is India Bull Housing Finance. Though most of the real estate space is doing good, this is again proxy play to the real estate. India Bull Housing Finance is doing good since last couple of trading session. Stock is now trading about to 50-day moving average. Looking at overall structure, we expect next target for the stock towards 188 to 190. So one can buy with stop loss of 170. Third stock is from the defense space, that is Bharat Dynamics. Stock has shown good traction in last couple of trading session towards the buying side. Stock managed to give breakout above 50-day as well as 200-day moving average. Looking at the overall structure, we expect BDL can continue furthermore upside towards 1130, 1140. One can buy with stop loss of 1060. And the last stock that is from midcap space, that is Time Techno. If we analyze the overall structure, stock is trading above to all its important moving averages. Now stock is making a higher top, higher bottom formation on the daily chart. Looking at the daily, weekly time frame, the stock is ready to move further higher towards 185 to 190 zone. One can buy this stock with stop loss of 167.
All right. That is Rajesh Palvia for you. Sir, what a pleasure speaking to you this morning. Thank you for joining us here on First Take. Hope
Thank
to
you
see
very
you
much.
again very soon.
Thank you. Surely. Yeah.
But before we move on, let's also look at how the markets are doing. From what I'm made to understand, Nifty is holding on to those 19,600 sort of levels. And as you can see on your screen, as of 10 a.m. this morning, Nifty 50 was up 0.95% at 19,628 sort of levels. So pretty much holding on to those early morning gains. Sensex, on the other hand, is also sitting well above that 65,500 mark. Nifty Midcap has also surpassed that 41,300 sort of levels, and it's as of 10 a.m. this morning it was up 0.74%. The Nifty Small Cap 100 is the leader of the bunch. It's up 1.14% at 13,765 mark. But with that, let's also welcome Mr. Kranti Bhatini, equity strategist at Wealth Mill Securities. Hello, sir. Good morning. Welcome to the show.
Good morning, Shreyash. Thank you for inviting me on your show. It's always my pleasure to share my views with you.
Sure, sir. Sir, I want to begin by asking how the markets in general, the global markets as well as Indian markets are positioned. I mean, the kind of, the inflation in US came softer than expected. In India also, it was softer than expected. Today, we saw a gap up opening of about 100, 150 points or so. Are all the positives that we have seen in the last couple of sessions when the market was on a holiday, have they been priced in?
Yeah, sure. The global cues are currently helping the market to try to keep the market on a higher range. But Nifty 19, we are back again, 19,600, we are back again, which was the previous high. So what it shows is, the point I'm trying to emphasize is, there is a strength, that is inherent strength is there in Indian market, and Indian market is definitely, it's a buy and dips market. It's showing its 19,000 level, which helped the market to sustain above this level. Now, what we are witnessing in the market is the global cues, the tailwinds have been helping the market to rise above the strong resistance zone of 19,700. This was the range where earlier the market was struggling. Right now, we need to carefully observe next few days how the market is going to position, whether we could able to climb these strong resistance levels. I can say climbing the wall of worries. That is extremely crucial at this point of time. But definitely, Indian market, the current setup of the market, it's a buy and dip and sell and rally market. Right now, what we are witnessing is it's a broad-based buying interest is coming at this point of time with respect to Indian market. Now, Shreyash, we need to take the point also into cognizance. During this last 20 trading sessions, FIIs have been the net sellers. Okay, they have not bought actively in this market. Probably the data shows in the past 30, 40 trading sessions, if you see, they're the net buyers. Despite of these FII sale numbers, okay, what we can see is the Indian market could able to come to the new zone, okay, which was the earlier high. That shows the strength in the Indian markets at this point of time, Suyash.
Sir, talking about FIIs missing on this rally in the Indian markets, I mean, one of the reasons why FIIs have been missing was because the US 10-year bond yields had scaled to a 16-year high. Now we have come off significantly, around 60 basis points or so from that 5% sort of levels. However, we are still relatively, high. So given that, bond yields are high and fixed income offers attractive returns to the investors, do you expect the markets, at least in the near term, equities to be, the returns to be muted and FIIs to stay on the sidelines?
Some portions here, okay. The hot money is concerned. You're absolutely right. Okay, this yield difference will make the going to play in the medium to short. But if you see the long only money, where what we are sensing at this point of time, you're absolutely correct. The bond yields of US Treasury, they were around 22 years high. It went around above the 5% level. And right now, if you see when the inflation data that's cooling in US, that given a strong rally, strong rebounding rally in Dow Jones last night. So what we are witnessing is there is a significant demand for the risk appetite. Money is flowing into equities across the globe, and throughout the globe, the equity markets have rallied. Okay, what we can conceive through this example at this point of time, through this exhibit at this point of time, there is a money that is flowing into the equity market. What does it mean? On a longer note, the company profits are higher when compared to the debt instruments. So the long only money continue to come into equity market at dips, whereas the hot money can be chasing in between these timelines in the medium to short term.
All right, sir. I mean, in early 2023, there was talks of US slipping into recession.
Suyash, there is a audio problem. I could not able to hear you.
Yes, sir. I'll repeat my question. Now, in early 2023, can you hear me now? Kranti, sir?
Sorry, excuse me. The audio is not coming, Suyash. There seems to be some technical problem.
All right, we'll get back to you as that audio issue is fixed. But let's get back to how the markets are doing. Again, Nifty is holding on to those strong gains. As of 10 a.m. this morning, Nifty was up 0.95% at 19,628 mark. So as I mentioned earlier, it's holding on to those gains that, the gap up opening that we saw in today's trade. Sensex, on the other hand, was up 0.89%, sitting above the 65,500 sort of levels. And the Midcap 100 index was up about 0.74%. It has reclaimed that 41,000 mark. But I think we have Kranti back with us. Kranti, I wanted to keep it with US markets for another question or two. So in early 2023, there was talks about, US perhaps slipping into recession. But in the last couple of months, there has been a narrative playing out that perhaps we are heading towards a soft landing. But now UBS has come out with a report, saying that by second quarter, US is going to slip into recession. I mean, what is your opinion on this? Are we heading towards a financial accident, or is US perhaps going to have that soft landing that analysts have been talking about?
Yes, yes. It looks very interesting data that comes from US. One thing is clear with the data. I don't want to get into the projections at this point of time, but the existing current data, what it shows is US economy is moving strength to strength. The growth numbers have been quite strong with respect to US numbers are concerned. Whereas the key concern for US at the same point of time is inflation. Right now, given the kind of softness what we are witnessing with respect to the inflation is concerned, what we can sense is how the Federal Reserve is going to play in the next coming Fed meetings. Okay, whether they are going to take a pause or going to take a rate cut, it's the key important thing at this point of time. I don't, what we are seeing from quite a last four quarters have been the news of US getting into recession. Now here, I don't foresee US getting into recession immediately, because the numbers have been quite strong. Unemployment data is reducing at this point of time. The economy is showing its resilience. Since it is going to be the election year for US also, I don't think so. US economy is getting into recession immediately. They have a lot of ammunition. They have a lot of ammunition in the sense the financial leverages they have. Most probably they can tend to avoid any sort of those kind of recessionary worries, given the kind of the political playout is concerned at this point of time. So I'm not worried with respect to US recession worries are concerned, but how they are going to soft land, how the Fed movement, that is the key concern for US economy, that can create a knee-jerk reaction with respect to the global markets are concerned, Suyash.
Now, Kranti, what does this mean for India? I mean, our service exports have already been impacted in the results of IT companies. We are seeing that, that lack of demand, especially from the US market. Can you, help us understand what it means for India?
Yeah. One thing is with respect to the IT is concerned here, the large cap ITs have been showing this skittiness, whereas the mid cap IT has been performing well. Now the concern for the large cap ITs is winning the large orders. That is the key concern because the companies are conservative at this point of time. They are not expanding their positions and they are not taking their decisions so rapidly at this point of time. Of course, winning the deals have taking time and execution of the deals also taking time. That's where the lingering effect of US recession worries playing for the large cap ITs are concerned, Suyash. We need to wait and watch at least for next 2 quarters to see how this execution going to take place and how the new deals can be going at a faster pace. But at this point of time, Suyash, okay, it's not a major key concern at this point of time. US economy is quite strong at this point of time, but these lingering worries of recession worries do playing on with respect to the sentiment of the companies and sentiment of the order books are concerned at this point of time.
All right. Krati, shifting focus from global markets to Indian markets and especially the primary markets. Ask Auto has listed at a premium of about 9.5% at 309 sort of levels. The listing is pretty much in line with what the market was expecting. So what's your view on Ask Auto? Should one hold the stock for the long term or perhaps booking profits partially would be your advice?
With respect to the IPOs are concerned, Shreya, okay, what's the majority of the IPOs, what we are witnessing is there is a softening of the stock prices post listing we are witnessing in majority of the IPOs. With respect to the Ask Automotives is concerned, we need to, if the investors are getting a fair amount of gains, okay, there is nothing to concern about with respect to booking profits is concerned because after any listing, okay, what we are witnessing is after 3-4 trading sessions later, we are witnessing some kind of profit booking invariably coming into the majority of the IPOs are concerned at this point of time. So investors who invested with a medium to or listing gains, they can book profit. But the long-term investors, given the kind of momentum that is emerging with respect to the automotives as a sector, the EVs as a sector, and given the kind of robust the car numbers, sale numbers, what we are witnessing, one can hold on. The long-term investors can hold on to the stock, whereas investors who subscribed for this IPO with just for the listing gains, they can book profit at the higher end of the day at this point of time. But the important thing is one need to keep tracking the earnings of the companies. That is extremely crucial because most of these stocks, the listing companies which are coming into the primary market, the majority of the stocks are disappointing with respect to the earnings are concerned. I'm at by and large, majority of the stocks are concerned. So one can book some profits also at this point of time.
Now, sir, keeping it with the IPO market, I think we are running short of time, so just want to get your quick view on that. The much awaited IPO of Tata Technologies has finally been announced. The IPO will open for subscription on November 22nd. Now, the details of the IPO are not out yet with respect to, you know, what the price would be, what the size of the IPO would be. However, I was reading some reports which suggest that the offer would be a pure offer for sale. Is this something investors should be worried about?
We need to see the final draft, Suyash. Okay, there's nothing to worry. Okay, always Tatas, they do always in the favor of the investors. They try to reward the investors on a longer term perspective. We need to see the final draft at this point of time. Okay, at this point of time, and it's going to be one of the largest IPO with respect to the fundamentals and also with the size of the IPO is concerned. We need to wait and watch for the final draft is concerned with respect to Tata Technologies is concerned, Suyash.
All right, that's the view from Kranti Batini. Sir, always a pleasure talking to you. Appreciate you joining us here on First Take.
Suyash, there seems to be some audio problem.
Sir, I'm saying I'm letting you go for now. We are running short of time, but thank you for joining us here on First Take.
Thank you.
Yeah. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.